Okay. Good afternoon. You guys can hear me? Yep. My name is Melvin. I'm from Singapore. I represent QCP Capital. QCP Capital is a full suite crypto trading firm. We are the leaders in crypto options, and we provide institutional grade solutions for our clients in high net worth and institutional. But one of the things that we do as well is we invest quite a bit of our own capital into the Web3 space. And I thought today I just want to take some time to just share with you what are some of our thoughts, coming from the side dealing with institutions, and what are the points of friction that we're really seeing with regards to what blockchain is promising, and why is there a large amount of hesitance. I think this talk is probably timed in a way where we're experiencing so much negativity within the crypto world. This morning, Wintermute just announced that they got hacked, and that doesn't help to build the kind of confidence that we're talking about. So how do we build trust in a trustless system? So I think we go back to the fundamentals of trust. Trust is about assurance and confidence. Trust comes from a lot of the fundamental part about saying and doing as you're saying. I think that is something that we use to build trust. But when you look at a trustless system, it's actually saying that the participants do not need to know or trust one another for the system to function. And that's exactly what Web3 blockchain itself is trying to achieve. So, but there is a big gap. And if you were to ask me, and I'll reiterate this statement later, it is a massive quantum leap for someone to move themselves from a system of trust to the system that is defined as trustless. In fact, the word trustless itself is a misnomer, right? Because we're saying actually with the smart contract, the quality of trust goes up, but we use the word trustless. So it plays with the minds of people in that sense. I mean, if you look at what the trustless system talks about, it's a lot about transparency. It's a lot about confidence that whatever is said in the contract would happen. And of course, decentralization, which means there is no control of power that will break the trust between what is executed on the smart contract and whatever is going to happen in real life. So what creates this friction? We will discuss this a bit, and maybe later we can discuss a bit more about your thoughts and challenges about this. How has the world performed in general with regards to the word of trust? I think if you put the word trust out there and you said, is the world a more trusting place today than it was 10 years ago? We all struggle. I think if you think, let's not talk about the rug pulls, and let's not talk about the things that are not working within the Web3 space or stuff. But let's talk about the very simple fact of a single US dollar, right? The concept of the US dollar relies 110% on trust, because the total amount of debt within America it way exceeds the potential GDP. So what is happening? Actually, trust itself in the concept of today's world is already being defrauded in a lot of ways, right? And therefore, if you can see that there is a psychology and there is a fear within the population, within investors themselves. Because today, if you went to all the institutional investors and went on this concept, they themselves do not trust what they're investing in, even in the public markets, right? And they're having to deal with narratives and having to deal with all these perceptions of trust. So actually, in the world today, even as we say that we trust the money we put in a bank, which I'm sure very few do, right? There isn't that trust. The only reason why we leave the money in the bank today is because the government is going to bail us out if there's anything that goes wrong. Correct? But then what is that basis? So the trust actually keeps falling lower and lower, and you're just finding the strongest person who can hold it together. And if you looked at Kyle and Suzu, who have done a great great trust building using their Twitter personalities. That is also another problem, right? Where people are starting to follow those who they feel they trust, who they feel have the knowledge base. So, what about DeFi? What about using these tools that people don't understand? This is an example of how trust has been kind of defrauded and people have, made a big message out of this. And I think the reality is that when these things float out there, it doesn't help for people to trust in this technology, to trust that this is the way forward, and that this is going to change, this paradigm shift is going to bring about efficiency and certainty. And so there is a question of, unstable ground when it comes to these topics. And we'll touch a bit about why. So we do quite a lot of bridging as a company. What are we bridging? We're bridging people from the very traditional mindsets, the institutional space, into the Web3 crypto sphere. And this is some of the journey that we've had with a lot of these. And mind you, when you look at an institution today, for example, a bank, the person in the bank who's recommending a move towards Web3, towards DeFi, towards blockchain, always certainly touches that with their own money first. That has been the journey. No, it doesn't go the other way. If you looked at traditional finance and you looked at the way finance has set up, it starts from the other side. It starts with the big corporates, the big companies, and the rich people trying to sell off their stock or their assets to the retail. But here, we have a reverse, right? We have the individual who starts first with his own money, with his own experience. So what they struggle a lot with is that, they start off by saying, okay, wow, DeFi is the way to go. Let's put some money in there. Let's try and beat this broken financial system that we're in. I mean, that's a lot of what happened in the last round. But then they realize that it's actually very complicated because you have to learn to bridge, you have to learn to, you got to learn the different chains, you got to learn how to deal with the gas fees. And after a while, they've been putting into protocols and things get rugged, money's lost, they lose confidence. And what we saw in the recent breakdown in the crypto world was that then people said, this is too difficult for me. I'm going to start trusting people whom I think are the experts. And that's when the Twitter space became a very fertile hunting ground, for people to gain momentum into their projects, into their work, their DeFi work. And then what happens is we have the incident of what happened with Three Arrows and a number of others. I think Singapore's on the map for the wrong reasons because we've got too many of these CeFi examples breaking down. So what happens? Then people become disillusioned with this whole process and they walk away from this completely. And that is actually the biggest thing that I think as an ecosystem we have to grapple with, without which we will not see the return of capital. And that is why, hopefully I can share some thoughts and we can discuss a bit more about what do we think are some of the things that we can look to resolve. So here, I'm just going to give a quick message here of narrative economics. And narrative economics, this book, Narrative Economics by Robert Shiller, and he actually in his book says that a lot of the time, what we read in the financial news, what we read in all the things that we're seeing to try to explain the world of finance actually has a lot to do with narratives, has a lot to do with stories, and has a lot to do with spinning a tale that is believable. And why is that so? Because in reality, a lot of us think very, very emotionally. We're emotionally attached to our decisions, and therefore, risk itself, managing risk and dealing with risk or dealing with risk events is actually a feeling as opposed to something that is very empirical. How does it work? Here's the thing, and if I can just leave this thought with you, if you made $50,000 doing something, and you lost it and went back to zero, as opposed to losing $50 from zero, you actually feel worse having made 50,000 and lost 50,000. Why? Because it's all about emotions. But theoretically, you didn't lose money. You should be celebrating that. And the reality is because people are attaching emotions to the concept of risk. And therefore, to build trust in a trustless system, we have to deal with the emotion of risk. We have to give them the ability to grasp that and to understand and flip that emotion. So therefore, successful people who are in the trading business, which we are in, we are concerned about making the money as opposed to not losing money. Warren Buffett's number one principle. But actually, if you think about it, everyone who does trading on their own will always bet bigger after losing from 50,000 to zero, and not bet when they lose from 0 to 50. And that is because of the pure emotion of this. And as we deal with emotion, and we deal with DeFi, and we deal with the whole concept of Web3, we have to try to bridge that emotion for them, because that's the curve to adoption. So here's an interesting thing, and this is what people have done, right? Trustless systems are blockchain, big advantage. They are very difficult to understand and self-verify. So I put all my crypto into CeFi. Doesn't make sense. It doesn't make sense. And the only reason why it doesn't make sense is that we need to break it down and we need to make it understandable. And the wonderful thing about technology and the wonderful thing about being frontier is not only about the technology, but it is actually lowering the concept of fear of using the technology. Today, we move money through our banking system, a lot through our mobile apps, neo bank payment. 10 years ago, nobody would have done that. Why? Because one, we've taken the product from a very difficult concept, you simplify it, you improve the user interface, you improve the understandability, and you improve the trust element. And it comes back to that fundamental of feeling. I'm very sure, I'm not sure about you, but my father today would probably still not move money using the mobile banking app. Why? Because he cannot mobilize the technology. And if you can't mobilize the technology, you will never use it. And that is a reality, and that's the power of technology and use case, right? And I think that's what this meme actually does tell us. So, why are institutions struggling? Because moving to a trustless system is actually a massive quantum leap for people in general. People want assurance and confidence. So, for example, why would you pay money to see this doctor? Well, because if you go into his office, most of the time they put the certificates on the wall and they're telling you, I've been through school. What does the school do? Going through school makes him realize that he has to commit to the path to wanting to treat people. And that is exactly the assurance and the trust that he's given you with that thing up there. Now, the next thing you realize, he actually forged the certificate and printed it and put it up there. That's when you lose all faith. So if you think about it, when we look at DeFi and we look at Web3 as a future of financial innovation, right? Then we have to go back to the fundamental need for this assurance and confidence. So verification is really challenging. I think if you look at a traditional person, and I can appreciate that a lot of us here are within the tech space, so looking at a smart contract, looking at all these things, looking at a code base is something very natural. But if you ask a guy, well, let's not say a normal guy, let's just say this guy has got 20 million net worth. and they say, give me 50% of your wallet share. And what are you going to do with it? I'm going to put it onto the blockchain. And he's going to tell you, sorry, I don't read the code. How do I know it's not going to go? And so what the world has spent years building with company laws, with security laws, with all these, is to give the semblance of trust. I repeat, it's semblance. Why? Because today we say token projects that have pumped and dumped. Wasn't that happening back in the 70s and the 80s? Projects that raised money and the founders ran away. Don't we have that in the Chinese or other stock exchanges? So the reality is this: everything that has happened within the Web3 blockchain cryptosphere, it has happened in traditional finance. But yet, people are getting away. They are getting away with saying, I do not understand the technology. And so then, therefore, I feel it's incumbent on us to devise and think about solutions where we give verification. And I find that verification as an industry standard has not been reached. And if you do not have that industry standard that's been reached, then very few people can say, I put my trust in this industry standard. So that's one thing that's really big. I find a second thing that is quite difficult is sometimes, and I've seen this, smart contract auditors and verifiers sometimes put money into the projects that they verify. Now that is another very slippery slope. So if you are running projects, you should think about not allowing that to happen. Why? Because it completely breaks down the foundation of that audit, if you think about it. So, but these are things that are very normal, very innate, but we don't really make an effort to say that these are things we want to protect. So that's really important. Independent verification. Education is very important as well. I think there isn't enough education, and the fact of the matter is that many people were bad actors in the industry that leaves, back doors to the code, and that's something that, it's always one person that spoils everything, right? But it's things like that. And how do you educate the user about what you're building? I think that is very, very important, and get them to understand and encourage them to test and verify. I think that's always very important. In the institutional space, the risk controls are way higher than that of an individual person. I'll explain to you why. I'm not sure if you remember GameStop of Reddit and Wall Street Bets fame. Just for transparency, I bought GameStop at $16 before this whole thing popped up. The reason why I went in was because there was a statistic that stated that GameStop had 125% short interest. 125%, which meant that there were more shorts in GameStop than there was stock. Not possible, right? But what did GameStop tell us in the financial markets? GameStop is a very significant moment for me because that was the time where the man on the street beat the big institutions. And if you think about how blockchain and the concept of, let's say, cryptocurrencies, it's all about democratization of the individual and giving the individual the power and the right back. So it's the same thing. So, but if you think about it, why did GameStop have such a significant impact on the big boys? It is because the big boys have a fixated risk management system. And what happened? So when GameStop stock price started to move, all these big houses had risk management systems that forced them to cover the short position. And when everyone starts covering the short position, it creates a tail event that sent the stock to $400. What does it mean? It means that every one of them has a very, very rigid model. And therefore, when you are building tools and you're building solutions, you have to build with that concept in mind. And you have to build with that, giving their risk people that assurance. So the big part about institutional investments into projects would always be this. There's always two faces. One, the business guy. The guy who likes the model, who likes the business, who wants to put the dollars in. And there is the risk guy, who always thinks that if they put the money in and the thing blows up, he's going to be fired. So you've got to manage the dichotomy of it. And therefore, we have to consider the needs of the clientele. Unfortunately, I think, and having deeply thought about this topic, and having dealt with so many customers across the world, globally, trust still requires an element of human connection. And when I say human connection, we are talking about putting faces to names, not hiding behind pseudonyms, not behind cartoons, not Discord. It's really human connection. And that is something that we will need to do. The reason is because we need to complete the journey from trust to trustless. And as long as we are on this journey, I encourage, if you're running projects, to think about moving one of these dials. Because every time you edge them closer and you win them into the trustless system, that is one more. So this is an evangelical kind of journey. And therefore, we need to think about who we want to attract and where we want to bring them. So this, I probably would end off, and I think there's some time for question and answers here. But how do you verify the trustless system yourself? I think most people would actually say, someone else told me. And that person would say, oh, because he knows how to read some code. He knows this space better. And I think for projects to be successful, you need to win your own crowd. But the best way to win crowd is to understand their fear. Because if you can meet their fear, the technology will work. It's just the use cases and the usability. And how we bridge that is very important. And that is centrally what we do at QCP Capital. We try to bridge this gap, and we try to help people come into this space. So a lot of our clients have started using our services, in terms from an investment perspective. Then they themselves, they branch out, into the space of the NFTs, into metaverse, into all these things. And the reason is because they just need a guiding hand. And a lot of the times when we build, in terms of when we look at technology, we build the technology, we don't think about building that guiding hand. And I just want to, encourage all of us to think about this. There are many solutions out there, and I would love to hear, and stay in touch of how we can do this. But that is something that we've noticed coming into this space. And even as we continue to build on our platform, we continue to look for talent globally, because we realize that, that solution still requires a human angle to it. And how do we create the scalability, and how do we leverage that human connection is something. So another example of how we want to ensure that human connection, we interact with our clients 24/7. We do not let bots come into the play. We are only looking at bots for informational purposes, but whenever there's a question, there's a human. And the human has a name, and we can be contacted. And I think to bridge this gap, to bring people from that old world mindset where there is not enough efficiency, we need to help them understand their feelings of risk. Thank you. Yep.
Hi, thank you very much. Just maybe not such as a question, but more like a comment on the whole trust building that you mentioned. Is an example from a company in Croatia that's doing a brick and mortar retail shops for basically exchanging crypto to fiat and back. And as you said, like they have a 24/7 on-call support, and that really made a huge difference into like the regular people who want to get into crypto to break this barrier. So I just wanted to like comment on this, because I don't know how much there are such shops and businesses around the world who are doing the same thing. They're mostly like, like online, you have to register, do a KYC, whatever. But here you have like this human interaction with the support, with everyone. You can come into the shop, you can talk to the people, and this really, like, I know from first hand how much this helped a lot of people to build the trust and come into blockchain, basically. So.
Yeah, thanks for the comment. I actually agree with you, and just going to add on another comment. We've noticed a lot of projects in DeFi and etc. They open themselves in very, very odd jurisdictions. Very odd. And it doesn't help, because if you think about an institutional guy, and he sees that I've got to put money into a Panama entity, he's going to walk away. So I think these are some of the things that, conceptually we've got to try to structure and resolve. But thanks for the comment.
Thanks for the presentation, it was really insightful. Coming back to the point of all of the things that are happening right now in Web3 and crypto happened in traditional markets before. So what are some things that you're seeing in the future that are going to happen from traditional markets that we're not seeing right now? So of significant importance.
Yeah, I have to say this, and from where we stand, we believe that regulation is fundamental. The only reason why traditional markets and crypto markets and the way crypto markets are getting, and stuff are being looked at negatively is just because the regulators are not ready. So the problem is this, right? We're carrying the blame for the governments that are not quick enough. But I think structurally we also need to make the change. The need for people who are involved in crypto, Web3 and blockchain to actively reach out to regulators, I think that is something that's been missing for the last 3 to 4 years. And I hope in the next 2 to 3 years we see that change, because that is the only way capital is going to flow. I mean, if you deal with any institution or hedge fund or a bank, he's going to ask you, are you regulated? No. So therefore, here comes a little bit of money, which is not enough for anything. Yeah.
Thanks.
There's one more question, I think.
So if you propose regulation, what kind of regulations would you like to see in crypto?
Yeah, I think one of the things about fear, again, I'm going to deal with this element, is that we also have to think about what the governments fear. Let's be honest. And then there's only one thing governments fear, being overthrown. So I think a lot of the regulations that crypto or Web3 has been struggling with is this personal identity issue, right? But that is exactly what the governments are fearing. The personal identity is their way of ensuring that there's stability and control and they know where the bullets are coming from. So I think one of the parts which crypto of regulators are always dealing with is what they call, it's AML, right? Anti-money laundering, know your client kind of thing. I think that has to happen. The next thing I think the regulators need to do is to create an environment, and I'm not going to make it a big call, but think about it as a financial security. For example, if a crypto token or asset or tokenized asset, you have to make it a security. Why? Then it puts on the whole realm of controls. It puts the onus back on business owners, so project owners, business owners, to really show that they're serious about doing their business. And I think that is probably what has been missing in 3 to 4 years in the early projects, right? They've got a lot of projects that have raised money and just gone. And I think that's something, if we are serious about making sure that this is the future, we've got to work hand in hand with the regulators. I hope I'm answering your question.